All right. Now, this one is a consolidation, right? That range a little bit. Now, what I mean by that is when you looking at it on the higher time frame, you can get the range where the market is doing this, right? It's staying within a, I was gonna say a square, but within a rectangle, right? You see that? It's just respecting top zone and it's respecting bottom zones. Okay. Now I want to go ahead and throw a little hint in there, right? The whole time I'm talking about zone placement, notice that I have not used support or resistance. The reason for that is because a zone is just a zone. The moment you give that zone a name, you give it an identity that it haven't created for itself yet. So a bottom zone is just a zone. Your job is to simply wait for the market to hit that zone, bounce off that zone to go wherever it needs to go. If I tell you, yo, this is a support zone, right off the bat, you're gonna start thinking, oh man, I'm gonna buy it because it's support, it's gonna bounce. So you're creating something that's not there, right? You're gonna end up being narrow-minded instead of being open to an overall aspect of what the market can give you. All right. So even though it's ranging like so, see how many double bottoms, one, two, how many times it hit this, how many tops, double tops, right? So depending on the time frame, it will look different, right? Where in the monthly, weekly, or daily, it can look like candles like this, right? It could just look like this, these candles, right? It just range, right? Just like the one we just went over, right? Now, when you mark the highs, so again, you turn on, right? Let's take a step back. When you see this, right? Candles next to each other, okay? Consolidation, cool. Turn on the line chart to identify the turnaround points. So you will see the bottom, you'll mark it like this, right? See this right here. Let's change the color, right? This market here, okay, is the same thing, okay? That's how it looks like with the candles, and that's how it looks like with the line chart. See that? So what you do is you identify the turnaround point and you put the first zone. Boom. You will notice that it bounce off of it or go a little bit past it. Bottom one, same concept. Okay. Once you mark both your zones, if there was a little bit of wick in it, it will look something like this, right? It'll look like something like that. Once you mark those zones on the highest time frame, either the weekly, monthly, or daily, that's how it would look like. Once you drop down to the 4 hour, it will look exactly like this, but a bigger version of it. Okay? It will look exactly like this, but or a bigger version of it. Right? So it could also look just like this. Notice how it range. I'm gonna, of course, draw the zones, right? Turnaround point. See right here? That's the, so let's mark the structure point. That way you truly understand it better. Lower lows, right? After every lower low for a downtrend or a bearish market, you know the market, you're going to anticipate the market to give you that low high. After a low high, lower low, you anticipate a low high followed by a lower low and then low high, so on and so forth, right? Low high, right? Lower low, right? This same lower low here, see that? So you see how it looks like with the candle? That's how it looks like with the line chart, right? Now, that's the last lower low. Here is the low high. And once you put a zone like this, right? Because we marking the turnaround points, right? When you mark your turnaround points, it will look like that. You see that? The same thing. It's just that it will look like so depending on the time frame. So a consolidation on the monthly consists of either, very rare to see that the market consolidate for 5 months, but weekly or daily, let's just say you got like 5 days back to back, you're just gonna have to identify the highs and the lows in market. So all you're waiting for is a break and retest. So with consolidations, right? You either wait for this break, retest, sell, or break, retest, buy. That's why it's just a zone. The moment you're like, oh man, support zone, oh man, resistance zone, oh, now you're so fixated on selling and buying instead of just letting the market be what it is. Okay. So once it breaks above, so once it breaks the top zone, it comes back and retests, you buy it. But not just a buy, you wait for the bullish engulfing price action for the continuation. If it breaks below, and meaning that it breaks the bottom zone, you wait till it come back to retest it. And then you look for the bearish engulfing for the continuation. It's very simple, straight to the point. I need you to understand what the market is doing, not know what it's doing. All right. A know-it-all will say it all. When you understand, you just simply react. You just act. Okay. So we want to focus on understanding the information that we have. All right. So that's what you make with this. Okay. Understanding the ins and outs. So when you understand how to mark the zone, it's going to be really, really hard for you to lose yourself in the market. All right. Consolidation. I know you were told not to trade consolidation. Then how else are you supposed to take your trade? No one help you understand why they're telling you not to do something, but they're just telling you don't do it. They didn't say when it comes to trading consolidation, you want to wait for the market to break out of the consolidation and give you a retest. After the retest, wait for the price action that indicate market have now engulf the buyers or engulf the sellers so it could go up or down. They're not explaining that to you so you can understand. They just tell you don't trade consolidation. All right. Word salad. I say it all. I know it all is just going to say things. Okay. But I need you to understand. When you understand the zones, you mark them, you understand. All I have to do now is just simply wait for a breakout. Once it breaks, just let it go. I just let it go. Once it comes back to retest it, then you read and react. Okay. That's one thing I'm going to cover. Breakout, the different variations of a breakout, because there's break and retest and there's a breakout. Okay. Now, hopefully I didn't say too much or didn't speak too fast, that you guys do understand this. Okay. So this is what we have here. We have a downtrend, also known as a bearish market, where the market is giving you lower lows and lower highs. And then at one point, the market just stops giving you lower lows that's lower than the previous high, or lower high that's lower than the previous high. I'm sorry. The market stops giving you lower lows that's lower than the previous low, and also stop giving you lower highs that's lower than the previous high. Instead, it stay within range. So all of this is the same. Okay. All of that is the same. Now, all you're waiting for is a break. Like you want it to break out. Now, this breakout right here, market bought up. It gives you a bullish engulfing. Now, this bullish engulfing is one bullish candle that engulfed the last two bearish. Okay. Different candle price action, different variation, understanding what a bullish engulfing is, what it looks like. Okay. It engulfed the last two. Let me change the color. Let's do this and then sharpen it a little bit. Okay. It engulfed the last two selling candles or the last two bearish candles. Okay. Here is the engulfing point. Right now, I just want you to understand this is still a double bottom. It just hit it multiple times. Okay. Just again, that's one of the variations, even though I didn't go over it, but that's basically something like this, right? Boom, it hit the zone. Boom, it hit the zone. Boom, it hit the zone, and then to continue up. Right? It just hit it multiple times. All right, I just want to make sure you understand that. Now, here, this was the last time it gave you a bullish engulfing to go up. What I mean by that is we had a bullish engulfing here, we had it here, and we also had it here. The only difference is when after the market gave you this one, it broke the previous low high, right? To give you a new high point that is now higher than the previous high. That's why they call it a higher high. Now, we know for a bullish market, we always and only buy at the return, the reversal, right? The pullback, meaning once it comes back down, we want to buy it at a high low. So you want to buy it at the bottom to go up. So after the market give you a higher high because it broke the previous low high, now I'm going to wait for the market to come back down to give me a high low. What do I mean by that? I'm talking about a low that's higher than the previous one, right? Now, in the case of this, it did not give me a higher low. Instead, it just gave me a lower low that's equal to the same one. But what did market do first before it retest? It gave me a new higher high showing you that first aspect of a trend reversal, that it broke a previous high and then it just came back down to give me now another double bottom, right? So if you match this one with this, it will be the same thing. So you see, I'm going to minimize this. I know there's a lot on the board. Put this right here. Okay. Minimize it real quick. Put it back. I'm going to put in a little bit more work to it. So I'm going to count this. Let me change the color. All right. So if this was the top zone and this is the bottom zone, right? This is when the market broke above, right? Now it retests and came back down like so, okay? To give me my price action to go up. That's all it was, right? It broke above, giving you a higher high that's higher than the previous low high, and then it gives me another lower low because it's about the same level of the previous low. All I need is a bullish engulfing. Now with this bullish engulfing, again, a different variation of it. It took two bullish candles to engulf the last bearish candle, but those two bullish candles engulf the last two selling candles. It's just a different variation of a bullish engulfing or the engulfing bar price action. Okay. So you would pull the trigger right here. All right. You'll pull the trigger right there and then you will look for the last low to put your stop loss. Now, due to the fact that we had a range or consolidation where we didn't have no wicks, I purposely didn't do that. Okay. we didn't have no wicks. So that means we don't have a previous low point, like, with a wick where we put a stop loss. So now you have to just put the stop loss below the zone, right? That will be your low. So zone, put the stop loss below it, okay? 5 to 6 pips below the zone. So if right here, oh no, I don't want to do too much work. Let's make it thicker, right? If this is the zone, okay, I'm entering here at my bullish engulfing. There's no wick. Okay. There's no wick. After I enter here, I'm just going to put my stop loss below. That's the same low, but I'm going to put it 5 to 6 pips below that zone. That's my SL. Okay. That's literally it. All right. That's all there is to it. Okay. And what is it? Hold up. And don't overcomplicate it, okay? And once you learn to understand it, you could now also back test it, meaning the setup that you see in this book. All you got to do is literally go to the chart, identify a double bottom setup, and see what price action it had give you. That's what you're doing. You back testing. You seeing what's in the book is in the chart until it becomes second nature, where you just simply read and react. So don't overcomplicate it, especially with the zone. Identifying the turnaround point in the wick, it will help you understand how to trade it. So you do trade consolidation, not within it, but you can trade consolidation. What you got to do is wait for the break out, okay? Either to the upside or the downside. After the breakout, you will simply read and react, okay? Now, with this one, we do have a different variation of double bottom, right? You see, you have the first, let's go gray. Okay. You got the first bottom here. See, I have no wicks towards it. So look at the zone. Boom. You see that? So that was the last high structure, right? The last low high to give you this lower low. Okay. After the low high, you got a lower low, and market went, right? In the case of this, it gives you a higher high because that's higher than the previous one, right? So all of this is just infrastructure within the buying, meaning that when the market does this, instead of just pushing straight up, right? Instead of just pushing straight up, it does this. Okay? That's all it is. All that is literally part of this to continue. Okay, so that's all it is. So let me get rid of this. Okay, so notice that this time around, market hit the zone, but it hit it with the wick. Okay, so it's not always going to be the candle that goes within the zone. All right, it's going to be the wick. So when you use your line chart, you put in the exact turnaround point. With the line chart, it's going to look like it did not hit it at all because the wick will disappear. I don't know if you guys knew that, if you didn't, but when you looking at the chart, you put the candles on, you have a wick, you see all that. But the moment you put the line chart on, the wick is gone. That's why it's called a stop hunt. It's like it was never there. They just shoot down, take your money, boom, go. It's like it just disappeared. Liquidity. That's what it's there. It's just money being hidden in plain sight. Okay. Once you use the line chart, it's like it's gone. Okay. So look, you see, once you put the line chart, you know that's the exact turnaround point. Once you put the candles back on, you see, oh, cool, the wick hit that zone exactly. Cool. Now, and then you have a bullish engulfing. Again, a different variation of this bullish engulfing is where you have one bull candle that engulfed the last two bearish candle. Different variation. Again, ultimate price action. Just type in Royalty FX Academy. All right. And then you'll get the full collection, 7-book series, straight to the points and then out. Books that teach you to understand. Stop knowing. Let's start focusing on what we understand so we could move forward and be successful as traders. All right. We know too much. All right. Let's focus on that. So double bottom, again, different variations of it. So if you were to look at it with the line chart, right, it will look like something like this. Okay, that would be the zone right here. It's gonna come back to you. Remember this? See that? It will look like so. So in your mind, it never hit it. It never hit the zone. But once you put the candles on, right? If you this is the last selling candle. Boom. And let's generate a wick. Like so. I know. let's make it look a bit better. There we go. See that? With the line chart, it's like it never hit it. But once you put the candles back on, boom. All right. So you have to learn to understand, the when, where, and why. It helps you understand what's happening. That way you don't go crazy. You don't lose yourself. All right. A true break is when market goes above a previous turnaround point. All right. The candle has to close above it. And then of course it's not valid until you get the actual price action for the continuation. You have a double top here, as you can see, right? Same thing, right? You see I shot above it, went way past it. But guess what? Still came back down to give you that bearish engulfing. All right, to fall. So same here. You would enter here. That's your bullish engulfing. Since when you look to the left, you look for price action, right? When you look to the left, you'll notice it did the same thing. So the last price action that you got was a bullish candle that engulfed the last two. So it's the same thing moving forward, right? It happened to give you exactly the same thing. So last time, if it did this and buy up, it came back to the zone and showed me the same thing. It's like, okay, cool. I'm going to go ahead and join you. That's what you did last time. I'm just joining you, right? Now, since we don't have a previous low to the left, we're going to look at what we have currently right now. We have that long wick. So we're going to put the stop loss. It's literally at the zone, but you want to do 5, let's just say 5 to 10 pips below wick, okay? 5-10 or 5-6 below wick, all right? Well, I was going to write it in, but 5 to 10 pips below the wick, just to give you a little breathing room, just in case when and if the next candle open, if it does a stop hunt low to continue up, you'll be just fine. All right. Risk management. It's the system behind it. All right. Back to rules when it comes to trading. All right. Well, just so you know, that was the last setup. Okay. So I just want to get back to the rules. So remember, when it comes to trading, when it comes to your zones, to be very specific, okay? And then now, when it comes to your zones, always use the highest time frame. That's rule number 1. right? Because you want to see the bigger picture. You want to understand what the market is doing in the bigger picture. All right. When you get to the higher time frame, you want to turn your chart from candles to the line chart because you want to understand the exact turnaround point. The exact turnaround point is going to be your first zone. You're going to lay a horizontal line. You placing that there because that's exactly where the market turned around at. Okay. Now, rule number 2, or what you have to do after that, after you place the line chart, you're going to go ahead, put it back into the candle format. And then you're going to identify the wick, which is the highest wick. Let's just say, this was the bearish candle, and that's the wick, right? My bad, sorry. We're going bottom, right? Let's just say this was the last bearish candle. Okay, that's the wick. All right. And this is the bullish engulfing, and this is the wick of it. See that? Notice the wick for the bullish engulfing is a lot lower. The turnaround point, I just want to make sure we understand that, okay? I'm sure I just went over it, but here. The turnaround point is the last selling candle. So we start from here. And then the wick is the last low point, right? It's the highest or the lowest wick. It will be this. So combined together, that would be your zone. Okay? See that? So for when and if the market comes back down, all that is within your zone. So as long as the market comes within this area and give us all price action to continue up, we're going to take it for what it is. So just like we went over the setup that I took, 2 days ago. All right. So rule number 1, we use the highest time frame. And when it comes to marking it, we use the line chart first, and then the candles to identify the wick, combine the two, that's your full zone. Number 2 is the 4-hour time frame, which is the time frame we are going to use to actually pull the trigger. Okay. Rule number 3, we're looking for that price action which is a 4-hour price action. Since we're on the 4-hour waiting to pull the trigger, it just go hands to hand. And number 3 is the price action itself. That is the engulfing bar, which indicate buyers or sellers have engulfed. It literally does what it means. They have taken over. So you wait till they take over to join them. And rule number 4, and it's very, very important, that's definitely with your risk management, is where you place your stop loss. And you want to place your stop loss at the last low if you buy in the market, or the last high if you sell in the market. Okay. And that's literally pretty much all of it. Okay. So we cover double bottom setups. All right. Double bottoms, different variations. And we cover break and retest after the double bottom. What's the next setup that comes after that? So we cover all of that and how to place the zones accordingly. Always use the line. Okay. Same thing for the break and retest. Okay. Because you place the zone accordingly. Oh, I'm making a mess. All right. So let's do this real quick. Okay. What I'm saying is this would be your last selling candle. This will be the wick of it. I'm sorry. This will be your last buying candle. I am so sorry. And then this is the bearish candle to cause it to go down, right? Boom, boom, like so. Okay. So we did have a double bottom here. So when it comes to generating your zone, so your zone will look like this, starting from the turnaround point, right? The last bullish candle where it closed at. And then we're looking at the wick, and then like so. So with the break and retest, right, it could fall within it. So the zone is still the same. You have to identify the zone the same. But when it comes to the break and retest, you're just waiting for the pullback itself, right? Sometime it will hit exactly to the zone. Just in case if you guys did not know, when you do a fib, in the case of this, it will be a buying fib. When you go from low to high, this about 95% of the time is going to be 50% retracement. Okay. Because remember, it is 0 to 100. But like 95% of the time, that retest point will be 50%. And then below it will be, your 60 and then 70, right? Don't be so fixated on the numbers. The one that's the most important is the 50. Why? Because you always want the market to retrace at least, that's bare minimum 50%. Okay, that's the lowest you will use for your fib. Now, if it comes back down to the same zone, cool. Who cares? It's like a triple bottom. You will take your buy. Just you buying it because you understand market gives you a previous higher high. Now it has to give me a low. That's where I'm buying it. So you will look for your PA, bullish engulfing, to be specific, to buy up so the market can go match the previous higher high or go and give you one that's higher than the previous high. Very simple textbook. Again, the books are available for you. I guarantee you will excel by reading the book. It is the simplest book ever. Everything's very detailed, color coordinated, easy for you to understand. Right? For you to understand, not to know, to understand. So that way you could just simply read and react. Just by looking at one of the book, look at the setup, go to the chart, find the same setup, and you will see that it does exactly the same thing. Now, when it comes to the price action itself, different pairs, the candles may be a bit bigger. GU, which is the GBP USD, it gives you a lot of semi of a Morobozu, basically a engulfing bar that's bigger than the last three candles. So you get a lot of big bullish engulfing or a lot of big bearish engulfing, where you get one candle that engulfed the last three, one candle that engulfed the last two. That's one of the characteristics of the GBP USD. Okay. So like I said, it's still going to be the same thing. It's just going to look a bit different. Same thing goes for gold, NASDAQ, SPX, any metal of some sorts, silver, the US 30, German 30, all of that. Okay. So where my chain at? So with that being said, okay, that was pretty cool. That was pretty dope. That was a lesson brought to you by Royalty FX Academy. And like before, I really appreciate the comments, the shares, and the subscribe. I truly, truly, truly appreciate it. I promise to keep on working on getting better at this. I'm still new, but I'm working on getting better. I'm providing the information and learn to speak a bit slower. That way I won't say too much and give you guys the time to really absorb the information. Okay. Now, the books are available on Amazon. Go ahead and get you a copy wherever you at. Okay. So what I mean by that is if you are a beginner, intermediate, or if you consider yourself as a pro or advanced trader, you could always sharpen your skills. All right. I'm not telling you to change your trading system. What I'm saying is see that how it works and see how you could implement it within your trading system. Right. If you're somebody that likes to trade the lower time frame, you have to be on the chart all the time, sitting and going crazy, sweating because the market is moving fast. That's how it feels like to you. This teach you how to use the higher time frame to take the same trade. If you always worrying about news, this literally teach you how to not worry about that, because I'm trading the 4 hour time frame. When news come out at 8:30, last 4 hour candle is going to close at 9. So my price action will be available. If news come out at 10:30, it's a double bottom setup. Guess what? I already have a 4 hour bullish engulfing. So an hour, hour and a half later, that's when news going to come out. By then, I'm already in the trade. So remember, they say news move the market. Yes, it does. But what news does, it pushed the market in the direction it was going to go already. Literally. If you look at any chart when you backtest, double tops, double bottoms, meaning sells and buys based off the higher time frame. When you look at it, look at the calendar for news event. The setup was already available before news. Okay, that's what I'm trying to say. Your setup is already available. You're not worrying about that. Okay, and when news come out, okay, cool. If news come out at 7:30 or 8:30, whoop the freaking do. Why? My 4 hour price action is not going to be available until 9. See? If news come out at 10:30, well, my next price action is not going to be available till 1 p.m. I'm not worrying about that. Remember, news, yes, it moved the market, but news is used to push the market to a specific direction a lot faster. All right. So it was going to sell already. It just, news just forced it to go down a lot faster. I like to say news is the excuse that's used to plummet the market or push the market faster. I'm repeating the same thing over and over, huh? But yeah, thank you again. I really, really appreciate that. I am on Instagram, TikTok, all right, and Twitter, Royalty FX Academy. And if you're on YouTube, please like, share, and comment. And I'm gonna see you guys on the on the next video. Okay. Again, I truly appreciate it. Bless.